Yo, what's up, guys? How you doing? This is Mind Blower, the CEO of MBFS Academy. Welcome to this session. In this session, we'll be talking about liquidity and trap zone in accordance with the high city concept or the smart money concept, as you all know. So, guys, before I proceed, I would like you guys to be very, very determined. Like, I want you to focus on what I'm about to say, all this stuff I'm about to expose to you guys. You might have had it somewhere, but you don't really get or understand how it works. Understand? Because a lot of bullshit out there. So now, guys, at first, let's first talk about what liquidity is really all about, guys. What do you understand by liquidity? What do you understand by liquidity? Okay. Some people will say liquidity is the creation of what of ranging market. Liquidity is the creation of what fake support. Liquidity is the creation of fake resistance, fake demand zone or support zone, or fake demand or supply zone. You understand? So a lot of stuff out there. But let me tell you guys today that when we're talking about liquidity, liquidity refers to how active a market is at the moment. You understand? In the forex market, it is determined by how many traders that are actively trading at that moment and the total volume of people that are trading. You understand? The total volume of money input in the market at that moment. One reason the foreign estate market, which is already so liquid, is because it is tradable 24/7. You understand? Like people usually trade on daily basis. That's what liquidity is really all about based on the retail concept, okay? But when talking about ICT concept, liquidity can be said to be what trap zone that the big banks usually create fake supply, fake resistance, and stuff like that. In the sense that they usually trap retail traders to believe that this is a support level that you can buy it on. This is a nice double bottom. This is a nice triple bottom. You understand and stuff like that. So now, guys, without wasting more of our time, I would like to tell you guys that what we'll be dealing with today is all about what? It's all about liquidity and trap zone, guys. Liquidity and what? And trap zone. So, okay, now, guys, um, we have two types of liquidity, okay? Based on ICT concept, we have two types of liquidity. We have internal range liquidity, we have external range liquidity. We have liquidity by creating equal highs, liquidity by creating equal lows. We have daily high, we have daily high liquidity, we have daily low liquidity, we have weekly high liquidity, we have weekly low liquidity. In fact, we have both yearly and monthly liquidity, monthly low liquidity or high liquidity, you understand? But I don't make use of all those ones. I make use of what equal highs, equal lows, daily high, daily low, weekly high, weekly low on daily basis because I'm an intraday trader. Okay. So now, guys, without wasting more of our time, so I want you guys to I hope you guys clearly remember when we talk about AMD, you understand concept of what accumulation, manipulation, and what distribution. You know, I talk about something like this at that time that we have something like this in the market, like market pushing to the upside, then the market starts ranging during the Asian session. We have some kind of manipulation, then what market distributes. Okay, these are ranging side. Okay, this for a bearish market. You understand? A bearish market. Okay, but if it is for a bullish market, we have something like this there, like we have market like market rate market doing something like this, like market ranging this way. We have some kind of what manipulation and distribution during the New York session. You understand? This ranging during usually happen most time during what the Asian session. All these pair with JPY, they usually happen on them. Okay, this accumulation phase. So also it can be otherwise too. It can be something like this. We have something like this. Um, then manipulation one, manipulation two, then boom, you understand? And it can be like this as well. It can be something like this. You get accumulation during the Asian session. We have what manipulation one taking the highs, manipulation two taking the lows, and what push to the upside, and markets keep on moving. Okay. So now, guys, without wasting more of our time, guys, let's first talk about what internal and external range liquidity is really all about. Actually, I supposed to talk about fair value gap before talking about this, but I want you guys to know that there is something in ICT called what fair value gap, but that is not for today, like today's session. Okay, we'll be dealing about that in our next session. Fair value gap. There's something called what FVG in ICT concept. Fair value gap simply refers to the concept that the long term, or there's like a long term buying in the market, or a long term selling in the market, that does not give chance to the opposite traders in the market. Like, let's say people are just buying, are just selling, people are selling for a long period of time, and there is no chance for people to like buy. You understand? So this is like a void. You understand? This is like a void. So the market has to like return to the gap, fill in the gap. You understand? Then what? Continue its selling opportunity. Or if it is in a buy, like people buying and buying and buying and buying and buying, but people could know what, there's no chance for these sellers to like sell. So there will be something like a fair value gap here, that people they will have to like fill the fair value gap and then continue buying. I hope you guys are getting that. So that's the concept of fair value gap. Actually, I'm going to show you guys in a live session so you guys can actually understand more better. So without wasting much of our time, guys, we have something called internal and external range liquidity. When talking about internal and external range liquidity, I would like to show you this in the live chat so you guys can actually understand what I'm actually saying better. Okay, so let me show you guys the new screen. Okay, guys. Okay, guys, now let's first talk about internal, external range liquidity. When talking about external range liquidity, it can be the formation of an high and immediately and a low, you understand? Or it can be formation of a low first before and high. Okay. So what I'm trying to say here is that when talking about external range liquidity, whenever a market is moving in from about swing high, swing low, and stuff like that, like this, we have something like this. Let's first talk about. Okay, this for the sell, for the buy. You have BMS, right? Here we have our nice BMS. Also here we have our nice BMS, guys. So yeah, guys, let me tell you guys something. Okay, let's say, you see this IA, this can be our weekly high. This can be our weekly high. This can be our weekly low. Okay, here as well, this can be our weekly low. This can be our weekly high, and this can also be our weekly our daily high, our weekly low, depending on the time frame we are making use of. Okay, so now, guys, without wasting more of our time, so okay, let's first talk about how to identify this kind of highs and lows. When talking about swing high, I've already taught you guys about how to identify swing high. So like swing high simply means what, the candle that actually shoot up and what, the candle that actually shoot up and what, and break above what the next candle. You understand? The first candle, like the initial candle that comes before it. You understand? And broke structure. Okay. The swing low can be said to be, let me show you guys an example of what I'm trying to say. Okay, I'll show you guys later. Once I'm explaining that. So just try to like understand the concept. So now, talking about external range liquidity, this IEA is an external range liquidity. I mean, this level here is an external range liquidity. This one is an external range liquidity that is low. This one is what, an external range liquidity. This one is an external range liquidity as well. Okay, the high. This one too is an external range liquidity. Initial one. This one too is an external range liquidity. External range liquidity. External range liquidity. So all these highs, like weekly high and daily high, they are very, very, very important. Okay, they are very, very important. Always look at them before you take any trade, because your last week trade, your last week high or low might be the next hunt for the market makers to be taking. Okay, so always consider all these highs and lows. You understand, the daily highs, the weekly highs and lows, okay, before you do anything. So now you can see something like this here. We have an high here, okay, we have a low here, we have swing low here, we have a low here, all right, we have a higher low, swing low here, we have what swing high here, right? So now guys, what are we talking about? These are what external liquidity. We all know that there will be something like another block lying around here, okay? That's our order block, okay? Let's say we have something like our order block lying here. One of the three characteristics of liquidity is that liquidity usually revolves around what order block, breaker block, mitigation block, and what fair value gap. Let me say it again once again. Liquidity usually revolves around OB, which is order block, mitigation block, MB, void, FVG, which is what fair value gap, what breaker block, B. Okay, so I want you guys to please note this down. Okay, mitigation, order block usually, what do we say? External liquidity usually revolves around all these things. Okay, external liquidity usually revolves around all these things: order block, mitigation block, and what fair value gap, and what breaker block. So all these things are just for confluences in order to have a what high probability setup that's going to give you what nice pips to win. Okay, so now guys, let's say we have something like a nice order block here. Okay, let's say we have a nice order block here. There's an order block here because there is an IFC candle, like institutionally funded candle, that actually break the last bullish candle that is here. Sorry guys, the last bullish candle that is here, the candle that actually broke like something like this. There will be a bullish candle here. Let's say we have a bullish candle here, something like this. Then we have something like this. Here is our order block. Like here is our order block. It is a valid order block simply because this candle, this long one, is an IFC candle. Understand? The same thing for bearish candle. You have small bearish candle here, then broken by what a long bullish candle. Not really necessarily for it to be long like that, but at least it should be long to some extent, and that will validate the level to be an order block. So we have our nice IFC here and our order block validated here. Okay, then we have our BMS here. Okay, so here is our what here we have our what external range liquidity. Okay, external range liquidity. External, let me just abbreviate this. E stand for external, R stand for range, and liquidity, L, external range liquidity, ERL. Okay, the ERL can be in form of what something like always note guys, this I here, okay, this I here, please, this I and the low of the external range liquidity, always look at them in your daily time frame. Then in your 4-hour time frame, your 4-hour time frame, your 15-minute time frame, 30-minute time frame, 1-hour time frame, they will be like in form of a double bottom, double top. You understand? If it is in the high, if it is in the structure of an high, you see them in form of a double bottom, double top, triple tops. You understand, and stuff like that, or something like a range, equal highs. Okay, so actually, I'm going to show you guys all the stuff I'm actually saying right now. So here we have what another external range liquidity. We have another external range liquidity. Okay, this one can be in form of what equal lows. You understand, like double bottom and stuff like that. So guys, I want you guys to be very, very attentive. Okay, I want you guys to be very, very attentive. So a good characteristic of what of external range liquidity is that external range liquidity usually revolves around what all these characteristics: order block, mitigation block, fair value gap, breaker block. Okay, let's say we have our nice order block here. Let's say we have what a very nice fair value gap, like market creating like big candles. Understand? Big candles here to the downside. Then these are our lows. Okay. So here we can mark our fair value gap. Our fair value gap would be, actually I've not taught you guys about fair value gap. The low here, okay, mark it this way. And this one as well, mark it this way. Definitely the market I expect the market to like return to this level here. Return to this level here. Okay. Then what? Continue the movement. This level here that the market is filling the gap, it might be in confluence with maybe like mitigation block. Always look at the left hand side for it might be in confluence with mitigation block. You know, we have FGG there, breakout block, or it might actually go higher. Take out the highs that is here, you understand? Take out the highs that is here, like the external range liquidity that is there before pushing to the downside. I know this thing might still seem very convincing right now, but I know you guys are going to get better once I start explaining in a live chat. Okay. So now, guys, that's a perfect example of what external range liquidity. Let me show you guys in a live chat so you guys can actually you guys shouldn't be convinced. Okay. Okay, looking at this chart now, guys, you see that this is a nice bearish order flow on CAD JPY, right? We have something like this here. We have our highs. You should look at that now. That would be something like our highs. Okay, there's an high here, there's low here, right? Okay, that simply means that when you look at what your daily time frame, you have something like this, right? Here is our external range liquidity. Here is our external range liquidity. Okay, actually, I want an external range liquidity that broke structure. I don't want the one that does not break structure, guys. External range liquidity that does not break structure is not valid. Okay, it's not valid, guys. Please note that external range liquidity that does not break structure, it has to like break structure, guys. Let me look for a valid one. Okay, guys, let's make use of this. Let's make use of this. See here, guys, these are our swing low, right? That's our swing low. You can see how the candle shoots out. One, this one is our swing low. Two, okay. Here is our swing high. Okay. Now, you know, guys, there's something like this level here. You see this level here is our external liquidity one. This low here is our external liquidity two. Okay. Now, what are we looking at? We know for sure that there is an imbalance here. Understand? We know that there is an imbalance there. The market will definitely return to this level before it's continue its move to the upside. But looking at this market, you see that there's something like taking away of all the liquidity that are lying here before the market starts falling, right? This is a perfect example of external liquidity. Like market forming what, let's say higher high, okay, higher high, something like this. The market gets to this point in your, let's say this is your daily high, then you have something like this, a double top. Understand? Don't expect market to just go down like that. No, markets you have to like take out this external range liquidity. You can see the double top here, external range liquidity, then come back here to the other block that is here, okay, or to fit this gap or breaker block. You know, that's why I said it can respect the breaker, it can respect the other block, it can respect the fair value gap in confluence with any other, maybe breaker or what other block. Let's say it respects our other block, then the market will now continue pushing to the upside. You know, this way now we've gotten another external liquidity. you can look out for them. You just mark them out like this, like these are equal, our low. There will be something like equal lows or ranging here. Understand? That's why we mix up what weekly range, weekly low, weekly high, daily low. Stop making use of what lower time frame. You just use lower time frame to see them clearly. So let's say you mark this level 2. Let's say you now have something like nice range somewhere here, okay, in your lower time frame. Then what will you be expecting? You'll be expecting the market to like come and take away this low. When the market take away this low here, then the market will now continue pushing to the upside. I hope you're getting that. So that's what I'm trying to say, guys. So now, guys, so I would like to show you guys some examples. Okay, let me use of daily time frame. Okay, guys, let me use of this. Look at this level here, guys. Look at this level here. This level actually broke structure. We are talking about external liquidity now. We're not talking about internal liquidity. You can see that, right? This actually broke structure. Where is our high? This is our swing guy right here. The one we have right here. Okay. Okay. Okay, let me just mark this like this, because it's this eye that actually take out this eye. When I mark this eye, let's say I now go to my my 4-hour time frame. On getting to my 4-hour time frame, I hope you guys can see that. On getting to my 4-hour time frame, guys, I realized, can you see that high that was not clear in your daily time frame? So I was able to see it clearly now. You can see liquidity line here. Now go back to the daily time frame back, guys. Go back to the daily time frame. Crazy, where is this? Okay, now guys, look at this. Look at this. This was July 3rd, 2021. We have our daily high to be here. You understand? Daily high to be here, and our low to be here, right? This low here. Can you see that? Now, what happened when I go to my 4-hour time frame? I'm looking for this liquid, like, because I know that the market is really, really bearish, right? I know that this thing has to take away this daily high before falling, like continuing before it continues the other bearish order flow. Then what will you be expecting from the market makers? You're expecting them to take away these highs that are here, but for you to see clearly, you change it to a 4-hour time frame, guys. When we change it to 4-hour time frame, what do you see, guys? What do you see? You see a nice breakup structure here, guys. Now look at this, guys. There's a breakup structure here. We have nice BMS there. Okay. Now what happened, guys? You see that the market, when the market gets to this point, the market respects then when the market gets to this point, then the market will push to the upside, create relative liquidity. This one is like, okay, we have two type of external liquidity, daily high, understand, daily high or weekly high. The external liquidity of a daily high can be in form of a double bottom, double top like this, okay? Daily high or weekly high, you can always find it on daily high or weekly high. And also it can be in form of a relative liquidity, like something like this, that they are slightly not equal. Okay, this, you can call this liquidity. So what you just be expecting from this kind of stuff is that you'll be expecting the market to like push to the upside, take away those highs, then continue the bearish order flow. Okay. this one as well too. You expect the market to like continue moving down, right? Take away this I here, okay, this liquidity, then what, continue moving down. So we have what, this is what our normal double top, like triple tops. You can be in form of triple tops, you can be in form of double tops. Now what happened here? You can see market maker actually will take away the liquidity, then what, market sold, continuing the order flow, which is what, bearish. You know, these are what week daily high, and these are our daily low. Okay, so what do you see? You see the market what, push to the upside, take away those high, then what, continue falling. It is in form of this pattern. Like you have something like this, market pushing to the upside, okay, then it's continue the order flow. If you move to the upside again, create something like that again, then continue the order flow. Understand? Continue the order flow. So these are patterns that you need to actually understand, but as time goes on, you guys are going to understand better. So now let me show you some more examples of external liquidity. Okay, guys, now look at this, guys. You know, this is a relative external liquidity. These are high here, okay? When you mark this, you know, these are our daily high, right? These are our daily high. These are our daily low. Okay, the one that actually break this structure here. And don't forget that this is a relative liquidity, like they call it what, relative liquidity. Okay. Now, what do you see here, guys? What do you see? You see that the market maker, they have to like when the market gets to this order block here, this one here, the one that led to break of structure. Yeah. Sure. So when the market gets to this point, what happened? You know, the order flow is still bearish. Okay. What happened, guys? We have something like this. Our relative, we have relative liquidity, which is what, equal highs, slightly equal highs, right? Then we have market returning to order block here. Then what happened? They stop on they take out these highs here, this daily high. You understand? Then what happened? The market started what, going up. You see what happened again here, guys? Let me show you again what happened again here. You know, this is another high. If you check your daily time frame, this is another high. Okay, you can see what happened here. They take away this high here. They take away this high here. And what happened? The market come back here. Okay, then they keep on taking away those highs. So until they take away this high here too, the market now sold off. So now, guys, what I'm seeing right here, if we should go to daily time frame now on CAD JPY, you realize that, okay, let's mark our low and our low. Okay, so we have our weekly low to be here. Okay, we have our weekly high to be here. So what do you have to do right now, since this is a recent market movement? Now you have to mark your last week, your last upper week high. This is the last upper week high. And guys, don't forget that, please, I want to get, we are still talking about external liquidity. We've not talked about internal liquidity. There's a nice breakup structure here, guys. Note that. You can know this. You are good to go, guys. You are really, really good to go. Okay, we have nice BMS there. And don't forget that we have nice order block here, guys. Nice order block here. So now, guys, look at this concept. What is the pattern you are seeing here? We are seeing something like this in the market. You know, the market order flow is clearly bearish. Okay, it's clearly bearish. And in the last recent time, we have something like this, a breakup structure. Then the market creating what the last week high. This is our last week high, swing high. Okay, you mark it out, then you have something like this here. Relative equal lows there. Then market currently moving to the upside, almost close to this high. I'm expecting the market to like take away the liquidity that is lying above these last week highs. Then markets will sell off, continuing the order flow. So I'm expecting something like this. I know that if I change this to my 4-hour time frame, there will be something like this here, like a range. You understand? So I'm expecting market to like take away this liquidity, respecting the order block that is here, then push to the downside because there is still fair value gap, a lot of fair value gap at downside, but we'll not talk about that. This is liquidity lesson, not fair value gap lesson. So I'm expecting the market to like respect the OB here. With our confirmation entry, I'll be entering here. KJPY next week. The new week will be entering tomorrow now. I'll be expecting something like that. I'm expecting KJPY to like push to the upside, close to this level. Then what? Then down. Because if you should look at it, guys, you will realize that. Okay, let's take this to 4-hour time frame. You see, how do I start? What you just have to do is that mark your, if you want to make use of weekly stuff, you mark your weekly, your last week highs and lows. You mark up your last week, your recent week highs and lows. You see, this thing really works, guys. It really works. How? When I mark my last week lows here, you understand? And the highs. Can you see that? You see that here, markets, they came to like stop on here. You can see it, right? They stop on there. What happened? The market pushed it upside. Okay, the market do what? Push to the upside. So now I'm expecting same thing here. This low, market taking out this the high here, tapping this my order block here, potential daily order block here, then push to the downside. Okay, that's what I'm expecting from this market. So here is the pattern, guys. Here is the pattern. Let me show you. If this bearish order flow, let's say bearish order flow, you understand? I hope you guys are getting that. You can see this is the one I'm expecting on KJPY. All these highs and lows are external liquidity. Highs, low, 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 highs, highs, low. Okay, they are external liquidity. You understand? External liquidity range according to the ICT concept. I hope you guys are getting that. So now let's take this KJPY perfect example to 4-hour time frame. Then you guys are going to see clearly what I'm saying. Now, guys, can you see that? you see that we have so guys, we have you see that when I mark up my highs and lows on CAD JPY, there's a potential order block here in our daily time frame, don't forget. And there is relative liquidity line here, okay? You can see that relative liquidity, they might not be equal, but they are relative liquidity. Like a lot of people are willing to sell here, okay? So what I'm expecting from this market is that you see that all this relative liquidity that are lying here, the one here, you can see the market taking them out, right? You can see that taking them out, like then pushing to the upside. So I'm expecting the market to like push to this level, then we'll continue the order flow. And there's a big relative liquidity line here. These are our lows here, okay? So I'm expecting this market to like take away this level, okay? So that's all about what external range liquidity. External range liquidity. It is the taking out of what old highs and old lows in the market. Do you understand? Okay, another perfect example here, guys.